Welcome back to TD Talks. I'm your host, Taylor Davis. Today is Monday, October 13th, 2025, and it is my wife's birthday. I think she and her birthday are bringing us good luck in markets after the wild Friday and weekend that we have had. So let's get into it. Last Friday delivered a harsh reminder that market tranquility can reverse quickly. President Trump escalated tensions with China by threatening 100% tariffs on Chinese imports in response to Beijing's export controls on rare earth minerals. That announcement sent shockwaves through equities, especially in tech and semiconductor sectors, which are directly exposed to supply chains. S&P was down 2.7, NASDAQ dropped 3.6, and Dow lost nearly 1.9%. Valuation concerns, narrative fragility, and concentration in growth names amplified the downside. Many momentum names that had carried gains over prior weeks stumbled under the weight of headline risk. I'm going to be saying headline risk a lot here, folks. I've said a lot in the past. I'm going to keep saying it because it is a common theme in markets today. That day marked one of the sharpest single session losses in months, effectively ending a long stretch without a 1% daily decline for the S&P. Valuation multiples came under pressure, and investors questioned how much optimism was already priced in. Let's talk weekend developments and market sentiment shift. Over the weekend, the tone softened. President Trump tweeted a more conciliatory posture saying, "Don't worry about China. It will all be fine," drawing some relief. Markets interpreted that as a potential de-escalation, moving from threat to negotiation. Chinese officials responded by signaling openness to dialogue, though they made clear retaliation was still on the table. That shift stoked a rebound narrative. In particular, Broadcom surged after announcing a partnership with OpenAI, helping lift semiconductor sentiment. Tech names led gains in futures and early trading as investors leaned back into growth after pricing in risk, and markets looked to earnings and policy signals to validate the de-escalation might hold. In effect, the weekend's developments gave markets a pause and some breathing room to reassess downside pricing and reset sentiment. Where we are today at noon, as of midday, S&P is up about 1.5% from Friday's lows. NASDAQ is outpacing, rising more than 2%, led by rebound in mega cap tech, and the Dow shows a lot of strength, gaining 1.2%. Market breadth is improving, in my opinion. I mean, most sectors are participating, though tech and semiconductors remain among the leaders. The rebound suggests investors are giving the softer rhetoric the benefit of the doubt, at least momentarily. The key narrative now, in my opinion, is, can sentiment sustain recovery, or will it fall prey to renewed trade or, trade tension or weak earnings? We'll have to see. Again, I'm playing the long game. So headline risk, I'm watching it affect markets, but it's not affecting how I view and value, the companies that we are interested in owning small pieces of. So here's some implications in what I'm watching today in this week in markets. In my view, we now confront a tension between narrative reflex and fundamentals. Friday's move was driven by fear, runaway tariffs, supply shocks, valuation risk. The weekend prompted hope, de-escalation, negotiation, relief. Today is the test of which side sticks, and I think the rest of this week will be a test of which side sticks. I saw a lot of folks, their commentary was this is, going to be a trade war and it's going to crash the market and that sort of stuff. I kind of view it as a lot of posturing. I mean, we saw that in April. This is part of the President Trump style of negotiation. If you read Art of the Deal, you see everything that was playing out when that book was written. You see it playing out now, just governmentally. And I think you got to see through the folks who are trying to sensationalize things and throw you off your game, throw you off your plan as an investor. So what I'm watching this week, I'm watching earnings guidance from major tech and hardware firms. Will they reinforce confidence, or will they lean weary? Policy signals from both U.S. and Chinese leadership. Any flip back in tone could reinstate some volatility, could give us some buying opportunities. We'll see. Rotation behavior. Are we seeing risk re-enter via semis, growth, or cyclicals? Or is this a cautious rally? And then credit and yield dynamics. If bond markets tighten or credit spreads widen, it could undermine the recovery. So, in short, here on TD Talks, in short or in summary, Friday's sell-off reminded us how fast sentiment can reverse. The weekend gave markets breathing room. Today is about whether that breathing room turns into tentative recovery or sets up another reversal if headlines change. Thanks for tuning in today on TD Talks. You can subscribe on YouTube, Spotify, or Apple Podcasts. See you soon. The views and opinions voiced in this podcast are solely the views and opinions of Taylor Davis and do not reflect the views or opinions of any other entity or organization. The content provided is for informational purposes only and is not meant to be specific investment advice for any individual. Please consult with your financial advisor to address your unique circumstances. Taylor Davis does not provide legal or tax advice.